And 72% of the time the market goes up. And the answer came to me. And that's where I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Thank you for joining me today. Okay. So, what's going on? Well, first of all, the other day I told everybody when we finally ended with the short covering rally, the relief rally on Friday, a week ago Friday. Remember, we had 10 trading days that every night would be negative, and then in the morning they would open up positive. 10 days in a row. That's the pattern of a short covering rally. And then finally it stopped. Everybody who shorted stocks, who got trapped, bought them all back. They got their money back. And the fuel, that was the fuel that was moving the market. That stopped dead. Now everyone looks around and says, where's the big institutions? Oh, hell, they're back hiding in their cave. Okay, they're hiding in their bomb shelters, all surrounded by bonds being protected. They're not coming out. They're not going to come out. Why would they? So now we're sitting there and we start watching the bond yields going up. What are you, nuts? Bond yields going up? So why are the bond yields going up? Why are they going up so high? Well, because the Fed's hawkish. The Fed is not cutting rates. They're not going to cut rates. So you got the Fed that's hawkish. We got high inflation. Job numbers are strong. See, this is the problem when they lie all about this, saying how strong their economy is, the strongest economy in the world, the strongest jobs in the world. The problem with that is that makes it hard, because that tells you that the Fed's not going to, cut rates. So when they lie about how strong everything is, how hot, how the CPI and the PPI are strong, and retail jobs are strong, and they're not, they back themselves in a corner. And that's what's going on here. So right now what we got is high yields as a result of their inflating what's really going on. So now everybody was running to chip stocks. They've stopped. They're not going to chip stocks anymore. So we got, again, investors aren't going to chip. They're not going to be buying these chip stocks. Now, they were, but here's what happened. Everything blew up when everybody was buying the chip stocks and everybody was happy. All of a sudden, we had, again, people started to say, you know what, we got a problem here, because Wall Street came out with a report on what they call OpenAI. Now, OpenAI is a huge company. So what happened was reports, everybody's buying chips. They switched and started to buy chips. They thought you will make money on chips. Now that the short covering is over, we'll go to the chips. And then people are buying. Then all of a sudden we get a story coming out about OpenAI that killed the chips. So what's happening is, when OpenAI came out, the company, everybody thinks this company is driving this whole AI boom. But we find out that the chip stocks, NVIDIA, AMD, Broadcom, Oracle, they all started to go down. Now remember, we switched from the situation where it was nothing more than short covering. Everybody stopped. They switch, jump into the tech stocks. Everybody's buying tech stocks. Then all of a sudden, stories start coming about OpenAI, and they're in deep trouble. So now all the chip stocks that were doing pretty well starts falling apart. And so the TV jibber jabbers weren't talking about what was going on with OpenAI. They're pretty much bankrupt, but they're talking about, they're covering it. They're masking it. They're talking about Coca-Cola and GM, and they're not talking about OpenAI, which supposedly would be driving this whole AI rally. And so what's happening is AI Open missed their goals. They missed their all their user goals. They missed their revenue goal. They were missing everything. They were losing customers to Google. Now remember, nobody knew this. So you got all the jibber jabbers talking about GM and all this crap, and here underneath you got OpenAI, which supposedly driving this whole AI boom, and friggin' companies going out of business, and nobody's talking about it. So that's why when we had that few days that everybody was buying chips again, all of a sudden it started to fall apart when the story started to come out about OpenAI, and so. Also, we start finding out they plan to make $30 billion, but they're planning to spend $25 billion, and they've already spent $1.5 trillion. Okay, so they're spending like crazy. I mean, think about it. They already spent 1.5 trillion. So they got bills sitting there for 1.5 trillion, and now they're planning to spend another 25 billion. And they already spent 1.5 billion. They're spending another 25 billion, but their income is going to be 30 billion. What the hell's that? So remember, this is supposed to be the big guy. They're running everything, right? This is how all AI is existing because of AI Open. The company's name AI Open. So, I mean, OpenAI. So 30 billion is coming in, right? And you got 5 trillion, okay? Trillion. Now, get these numbers. 30 billion is coming in revenue, and 5 trillion with a T is going out. What are you, nuts? So that's why if you've been in the chip sector the last few days and it's not doing well, this is why. But the jibber jabbers on TV are masking it. They're talking about GM and Coca-Cola and Fluffy Bird and all that because they don't want to talk about it because all these guys on TV, Kramer, all of them, been promoting AI, open AI for so long, they look like fools. So then there's another problem that hit them. Now remember, this is AI. This is the whole enchilada. So now the open AI CFO, the person who signs the paychecks, told all these executives at the company that she's worried they can't pay their bills. Well, how do you pay your bills when you only have 30 billion coming in, but you got trillions going out? Unbelievable. So this is what's going on. So that's why you're seeing such a mess right now. Now, as I said, the TV jibber jabbers are masking us. They don't want you to know this. And now here's another game that they've been playing, OpenAI CFO. They take the same dollar and they keep the income dollar and they count it over and over and over. It's the same revenue. It's like you own an ice cream parlor, and you just sold one ice cream that night. You go home, your wife said, "How'd you do?" "Oh, we did good, hon." look at this. We had an ice cream, $1,000 in sales. Well, he kept counting the same, the same first ice cream cone he sold over and over. This is what they're doing. So the whole bottom line is that all this AI and open and all these centers, these data centers, they're in deep trouble. They're not making money, these data centers. They're not, all these people put big investments in the data centers are in trouble. They're not getting returns. So what's going on right now, keep your eye on the cyclical stocks. Okay, keep your eye on the cyclical stocks because the market is in big trouble right now. The whole stock market is in trouble because, as I said, for so long, we've had since March 30th up to April 24th, we had all these big rallies going on, right? Because it was short covering. They're fake. Shortcut. But now everybody bought their stocks back and there's nobody coming in to buy. And who you need to come in to buy is the big institutions. We have 12 institutions. They control about $13 trillion. We need that $13 trillion that they have on their books, shove it through the 7 pipelines to different stocks. They're not doing that. They're not doing that at all. So again, now the other thing you should be watching to see if we're going to get a crack or we're going to get a big correction is, remember, IWM is where your answer is going to be. Can this market keep doing this? Just keep going up when all this crap is going on? Well, if IWM will tell you, not Kramer, not anybody, IWM, the small mid-cap stocks, they're the core of the economy. Watch IWM. They need KRE, the small cap banks, to go up. Keep watching the small cap banks going up. Now, if they go up nice and solid, we'll start buying those. KRE, the small banks, will push up IWM, and that's a good thing. And then, remember, we got to watch the cyclical stocks. They're extremely important, okay? Because the cyclical stocks is the backbone of the stock market, okay? And they need low yields. So if we take the cyclical, and people don't understand the cyclical stocks are so important. And if you look at the cyclical stocks, here, we'll just put a few up here. Just for example, give you an idea of what I'm talking about here. Cyclical stocks are so important. Let's see if I can find them for you. Hold on right here. Okay, so the cyclical stocks. So let's take, for example, consumer discretionary, Amazon, Lowe's, Starbucks, McDonald's. Then you got the transports, okay, like the airlines and railroads. Then you got the industrials like Honeywell and Caterpillar and UPS. You have the most important materials like NUE, which is one of our stocks. We've done terrific with that stock. Had a nice breakout today on the earnings. And now we get the big banks. Okay, now big banks are starting to move up because yields are going up and they make money with higher yields. So my point is that if you watch these stocks, the cyclicals, there's 6 groups, like your materials, industrials, I think there's 6, transportation, keep consumer, take each ETF, like take XLI, which is the consumer discretionary, take the transport symbol, IYT, take XLI, the industrial, take XLB, the material symbol, take XLF, the banks. And if you do that and watch them every morning, that's what you got to watch, okay? Because those cyclical stocks, people go in there, there's dividends in there, they start buying those, then you could be okay. But if those cyclical stocks start breaking down, you're not going to be okay. So we always know, and watch IWM, watch the NASDAQ, and watch the spiders. If the NASDAQ and spiders stay solid, but IWM rolls over, then we're going to head for a correction. So when someone says, what do you think the market's going to do? Just say to them, well, we'll know what the market's going to do if the S&P and the NASDAQ and IWM, the three of them, they're all green, and all of a sudden IWM rolls over, but the other two don't. That means a correction. So you always are going to know when there's a correction. So the yields in IWM always tell you what the stock market's going to do. They're never wrong. Join my gang. philsgang.com will help you. There's so much crap going on. It's unbelievable.
Are you nuts?